Hey guys, we've got some new stuff to discuss today in regards to the Bitcoin macro structure, and also in regards to black swan events that have been happening with FTX, etc., how that's affecting the market. We also need to talk about, probably for one of the first times on this channel, the Ethereum macro structure, because I'm getting a lot of questions on my YouTube channel comments about, obviously I'm buying Bitcoin at the lows, but am I buying Ethereum at the lows, and do I think that buying Ethereum at the lows is a good idea? So we've got a lot of stuff to get into today. I'm ready to get into that. But before we do that, I want to quickly give a quick shout out to the Wolves of Crypto VIP group results. If you're interested in finding out what the results were for the period between October 13th and November 13th, and potentially joining up to the VIP group, go down to the pinned comment and you can find a link that will lead you to results there. Spoiler alert, they were very good. All right, so let's get into it, guys. Cheers. We can start off just by briefly addressing the FTX FUD. Now, I'm going to call it FUD because I don't think it's actually going to have a serious long-term impact on cryptocurrency in a direct manner, in the same way that I don't think Luna, for example, would have a serious long-term effect on cryptocurrency. In the same way, I don't think Mt. Gox would have a long-term effect on cryptocurrency. And even if they do, it's indirect. And it's something we cannot point to exactly that moment and be like, all right, that's what destroyed crypto. It's like, okay, just look at this chart for a second. What do we have? Over here was Mt. Gox. Over here was Bitfinex. Over here was COVID. Over here, we had Luna. Over here, we had FTX. I'm sure if I looked into it for another 10 minutes and just did a couple Google searches, I could come up with many more black swan events that have happened throughout the entire history of Bitcoin. It's like, even with those 5 black swan events, flip over the 4-year cycle, guess what? The cycle's still the same. The cyclical theory still plays out perfectly. Nothing has actually changed in a macro structure. I think people need to understand that the markets are built to handle so-called black swan events. In a certain way, black swan events almost are built into the price action. Even in the COVID drop, even when we had a pandemic, and I know you could say, oh, well, governments and central banks entered quantitative easing after that COVID drop, therefore the pump was irrational, it shouldn't have existed. Well, the point is, it did happen, right? And it did happen, the 4-year cycle still followed perfectly. Even during the COVID drop, within months, we were back to the regular valuation of Bitcoin. And I have no reason to suspect at this point in time that this FTX news is going to be anything other than what we've seen in the past. I think it will be short-term damage, like it's already done, but long-term, yes, it will lead to probably more crypto regulation, but in terms of the charts itself, I don't think it's going to damage the 4-year cycle structure. I think Bitcoin will be fine. That's my opinion on the entire fundamental mess that's been going on over the last couple of weeks that I haven't really talked about, because I think that enough people talk about it. I don't need to add to the pile of hundreds of YouTubers making the same video, but I'll quickly address that. I will also say about USDT. Heaps of people are getting very worried about USDT. Again, I'm not going to claim to be the mastermind of all knowledge about USDT. I really don't know too much about it, but what I do know is that this has happened before, and it happened at a very similar period of time. It happened during the Luna crash, right? And it happened during the Luna crash, and it was twice as bad as it is now. And this, again, based off of that reason alone, it's like, well, it's pretty clear that USDT is not, it's a stable coin, yes, but it's not going to be perfectly stable throughout in black swan events with there's massive amounts of liquidations, massive amounts of volume in the market, whatever it may be, massive amounts of people transacting in and out of USDT, withdrawing from exchanges, etc. It's going to show some cracks, right? It's not the US dollar, okay? It's not the US dollar. It's a peg. It's a stable coin. It's a peg to the US dollar. So you can expect to see some volatility. Just because USDT went down from, $1 flat to, 0.998, which is a 0.2% depeg for like 2 days, it doesn't mean the entire market's going to crash and burn and we're never going to be able to recover again. I think people get into this mindset a bit too much, that everything's on the brink of collapse constantly in crypto. I think you'll find the market is a lot more stable than you expect. Once you understand how the market moves in a cyclical pattern, you understand that this market has a lot more structure than people think. It is not a random market. Nothing happens randomly. So it's very important everyone understands that before we even get into the main point of this video, which is, am I buying Ethereum at the bottom? That's the main point, because I don't want to talk about the short term too much. Short terms, we know what's going on with short term right now. Consolidation, we just had a massive drop, right? We could go down further, could not. The reason why I'm not talking about the shorter term too much, the reason why I didn't talk about yesterday either, is because we need to give the short term time to develop, right? Once you see massive moves like this, you see huge corrections of 20%, 25% over the course of a week. The charts need to catch up. Indicators need to catch up. RSI, obviously everything's going to say, oh, it's oversold right now. That doesn't mean it's actually oversold. So we'll look at the short term tomorrow, but right now we need to answer that big question. What's the deal with Ethereum? Are we going to buy it in the bear market? I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Mega Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. Okay, so to answer that question, we need to answer why are we buying Bitcoin in the first place. The reason we're buying Bitcoin, obviously Bitcoin is the Coca-Cola of cryptocurrency, in the same way Coca-Cola is, I stuffed up that analogy. Coca-Cola, you think of soda, you think of Coca-Cola, it's the number one, it's the first one there, it's the biggest name, it's the biggest brand, most popular, etc. It may not be the most objectively good tasting soda, but the point is it's got the marketing, I can't prove that or disprove that, but it's got the marketing, positives on its side. It's the king of the marketing, the soda industry. Bitcoin is the king of the crypto industry. And from a marketing perspective, even if it's not fundamentally the king, which I would say it probably is, but even if you disagree with that, you can understand that it is the face of crypto. If Bitcoin goes down, crypto, for the most part, will most likely go down, right? You can't lose the king. If you lose the king, the rest of the country falls apart. If you lose the king of crypto, the rest of the cryptocurrency market falls apart. So Bitcoin is very much the king of crypto. There's reasons for that. But the main reason is that it was first. It was first, it established itself first, it was the biggest name, everything was built off of that. To this very day, even, 14 years, almost 15 years after it, 13 years after its conception, it's still out there and it's still the biggest coin, it's still controlling the entire market, right? In this massive long period of time of its existence, since the first halving in 2012, we've seen that crypto has formed, as I said, and as I talk about very often, the 4-year cycle theory, the 4-year cycle date range trend that's been playing out for 10 years. We go to Ethereum, for example, we don't have that, right? We don't have that on Ethereum. Ethereum's been around for a fraction of the time of Bitcoin, okay? We can just go to CoinMarketCap, because this will have probably the longest data on Ethereum, and we can bring up exactly when it was created, because I can't actually remember off the top of my head, but we can see, late 2015, right? Late 2015, Ethereum's created, years after Bitcoin was created, and this, of course, is the second most popular coin. Now, the problem with this is this, right? 2015, it seems like a long time ago, but on a long-term scale, if you're analyzing long-term charts, it's actually not. It's actually not a long time ago at all, right? We've only had 2 cycles, okay? Bitcoin has had 3 cycles. Not only 3 cycles, but it's had, a miniature cycle before the halving even started, and then 3 separate entire cycles. Ethereum's not seen that, right? Ethereum's seen 2 bull runs, right? Which isn't actually that much. And so, as you guys know, in data, in maths, in general, you need 3 separate data points in order to connect the dots and say, that's a trend. We don't have that yet on Ethereum. We'll have that by the next cycle. Give it 4 years from now, we'll have that. At this point in time, we have 1 data point and 1 incomplete data point. That's not a trend. There's no trend we can possibly develop from that at all, right? And this is one of the reasons why I don't trust Ethereum, for long-term investments. How are we meant to trust something when every single ounce of analysis we ever do in technical analysis at all is based on historical data, even down to triangle formations? Why do we trust triangle formations? Because historically speaking, they have played out mathematically and they work historically, okay? If all of a sudden they stop working and then, that's not, then the historical data changes, it shifts, right? Why do we trust Bitcoin to continue going upwards? Historically, it's gone upwards, right? People say things all the time like, don't trust, don't rely on past performance to determine future performance. But in reality, that's all technical analysts ever do. That's all we do. That's the whole job. The whole job is looking at past trends, extrapolating, and continuing in the future. And maybe adding in small bits of current analysis that are happening right now that may toss it up. But for the most part, it's just analyzing trends and applying them to the future and extrapolating data, right? So everything ever in technical analysis ever that has ever existed ever is relying on historical trends. And when you have a chart like Ethereum, which doesn't really have too many historical trends because it hasn't been around long enough, That's one reason not to trust it too much. Now, I'm not saying Ethereum's going to die. I personally don't believe it's going to die. But from an objective standpoint, as an analyst, that is what I have to believe. That's what I'm compelled to believe. It hasn't been around long enough to trust as much as Bitcoin. Now, with that said, it's been around a lot longer than many altcoins, and I'm sure there's many trends you could find within Ethereum, and I'm going to find a trend right now just so I can play the devil's advocate for myself, right? During the bull market in Ethereum, we had in 2017 a long run up. We had one peak here, one peak here, one peak here, three little peaks, and that was a horizontal resistance line. So we go ahead and draw a horizontal resistance line there, bang, and then we saw one big blow off top, came down, retested, came up again, and then went down to the bear market bottom. Now, we were following that trend for a very long period of time on Ethereum in this cycle, right? Let's go ahead and try and find out what that really was, right? So we can see one big explosive blow up there, one peak. We didn't see the third one, but I suppose we maybe did, right? Because it would have been there. And then we saw a very, very, very tiny blow off top that was cut very short by the market, double topping. And then we dropped down, we saw one peak, and then we dropped down again. So, let's go ahead and draw in that horizontal line so we can see the similarities. The cycles were quite similar, okay? And this is something I was looking at during the bull market here while it was actually happening with Ethereum. The cycles were quite similar. 2017 Ethereum cycle and the 2021 Ethereum cycle were quite similar. We didn't see a blow off top to the same extent. We didn't see a resistance support flip, but they were relatively similar. And with that said, as you can see, we're going to just go this out. One peak, third peak, fourth peak, below, right? One peak, third peak, fourth peak, the low. If that trend is actually taking place, and it's not just coincidence, it would say that Ethereum's bottom is in. And it would say that maybe we go up a little bit and then eventually come back down, maybe we retest it later, and then we go up again. That's kind of the most compelling trend I can find on Ethereum, and it's not actually a trend because it hasn't played out 3 times. It's more of a fractal, and as you guys know, fractals are historically unreliable. So this all ties into the fact that I don't necessarily think that Ethereum is reliable for creating long-term trends. But if you're not convinced of that, right, well, we can just look at the actual data itself. The actual data itself is that Ethereum simply has not performed as well as Bitcoin during a bear market in the past. Look at Bitcoin during the bear market. Let's go back to the last bear market, okay? We can look at when was the halving. I don't know if Ethereum was around for it, but it probably would have been at some point. Let's get a better Ethereum chart up. Hold on one second. We can bring up the BitGet, Bitstamp Ethereum chart. All right, well, so 2016 halving will be around May 2016. Okay, so how did Ethereum form actually, let's go to this cycle here. Sorry, one second, guys. How did Ethereum form from the low in 2018 to the halving in 2020? Let's just look at that, right? So May 2020, the low was in December 2018. Ethereum did a gain of around 150% from the bottom to the halving in the last cycle. What did Bitcoin do? Bitcoin from the bottom to the halving in the last cycle, the bottom was here, and the halving was May 2020. Bitcoin did around 230%. So that's really everything you ever need to know, right? The only cycle we've ever had for Ethereum, in which Ethereum has been around for the same amount of time as Bitcoin, it's matched the same structure, and it's followed the 40 cycle in the same way as Bitcoin. The only time it's ever happened Ethereum has dramatically underperformed Bitcoin, even though the market cap is dramatically less, and on paper it should dramatically overperform Bitcoin. So if you don't agree with that, you don't agree with what I talked about before in terms of historical trends, you don't agree with what I talk about in terms of technical analysts using historical data exclusively, basically, then there's no denying what I just showed you. In the last cycle, which is the only piece of evidence we have historically for Ethereum in comparison to Bitcoin, Ethereum dramatically underperformed Bitcoin from the bottom to the halving. So why would I buy Bitcoin? Why would I buy Ethereum at the bottom in this cycle? If the only piece of evidence I ever have to kind of make an assumption about Ethereum's performance is that it's going to underperform Bitcoin. Why would I buy Ethereum? That's kind of what I leave you with there. It's the same reason I'm not buying altcoins until the halving, right? Total cryptocurrency market cap does the same thing. Total cryptocurrency market cap from 2018 lows to the high in May 2020 during the halving, again, underperforms Bitcoin. So the same thing. Why would I buy altcoins at the bottom when the odds are stacked against me? If I invest in Bitcoin historically, right, from the bottom to the halving, historically, I'm going to outperform most altcoins and Ethereum, okay? That doesn't mean there's not exceptions, but exceptions don't make the rule. So it's the same argument I made about not buying altcoins until the halving, right? Not long-term buying altcoins until the halving. Same argument, same thing with Ethereum. Why would I buy Ethereum at the bottom if it's not going to perform based on historical data well in comparison to Bitcoin until the halving? There's no reason. Okay, so Talk to me again about Ethereum when we're at the halving, then we can start to invest in it because, of course, Ethereum has historically outperformed Bitcoin in a bull market. It just hasn't outperformed Bitcoin in a bear market. So that's kind of a data that I wanted to look at. And I suppose I'll conclude with this. The daily chart on Ethereum, we do have a descending channel formation. It will be interesting to see what happens there. Again, there is evidence to suggest that we won't see the low again on Ethereum, especially with the halving, with the merge. Sorry, the low is quite far away. The low is another 33% drop on Ethereum, whereas on Bitcoin it's only a 10% drop. So there is a decent amount of evidence to suggest that we won't see lower prices on Ethereum. But again, it's all speculative at this point. What I would say is what I said before. I don't think it's a viable I don't think it's a good investment to make. To invest in Ethereum over Bitcoin at the bear market low, just based on historical data. It just doesn't seem like a good investment. And of course, historical data is all we have, as I explained before. So I'm going to get a lot of backlash for this video. I'm going to get a lot of disagreements, but all I'm doing is looking at objective data. You can disagree all you want, but you can't disagree with the objective reality of the situation. If you disagree with me in this video, you're essentially saying that this time will be different. Yes, it could, but you need a very good reason for that. So I'm interested to hear, if you disagree, what is your reason for this time being different to the previous 2 cycles? That's what I'm interested to hear. So thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video.